So now we have completed this one corporate tax topics, in which we have completed the introduction of corporate tax. We have completed the this exempt and taxable persons, who are the like government entities are exempt, and government control entities are exempt, qualifying public entities are exempt. Okay. And the taxable person, who are the taxable person, we have completed this one. And residence persons, what non-residence person, and permanent establishment we have completed. Now this portion we will study right now. So what is the taxable income and tax calculation? So the actually the corporate tax is imposed on the it will be imposed annually basis. So corporate tax will be the annually basis, and the corporate tax will be on the taxable income. So how the taxable income will be calculated, that you have in Dubai, or in I will for UAE I will pronounce it as a Dubai. Okay. So that will be a little bit easier for me also. Okay. So in Dubai, what will happen, they are all most of the company, or I can say 90% of the companies, they follow the IFRS, International Financial Reporting Standard, for the purpose of this auditing and everything, for keeping the books account. So as per the IFRS, you have to take the profits, and then you have to plus minus adjustment. You have to do the adjustment. So that will be the taxable income. So on the taxable income, you have to 9% of the taxes we have to pay. So there is a financial statement will be prepared as per the IFRS. You have to file the corporate tax return. Okay, that will be the imposed annually, and it will be on the basis of self assessment basis. Okay. And there the certain adjustment has to be made. Okay. To come to the taxable profit. Okay. And so these are the things. And this corporate tax return will be filed on the FTA portal. So FTA portals right now, they have right now you can register for the corporate tax. Okay. So registration is open. So if you are liable for the corporate tax registration, better you should register now itself. Okay. And the second thing, I will share you some important data related. The corporate tax is applicable on or after 1st June 2023. Okay. So these are the on or after 1st June 23 financial year starting, or calendar year. There is a calendar year or financial year, I don't know. Starting after this 1st June 20. So if your period is January to December, so for you it will be the January 2024 to December 2024. That will be the calendar year for you, and you have to file within the 9 months. Okay, 9 months you have to file. So up to September 2025, you have to file the corporate tax return. And in corporate tax registration will be done on the FTA portal. VAT registration is also done on the FTA portal. So VAT filing also you have to do to the FTA, Federal Tax Authority. Corporate tax also you have to go through the FTA. So these are the what income is exempt. So for the certain income, they have exempt, like and a specific income they have exempt, means they are not subject to the corporate tax. So income is coming. And for also that for if you are in getting any exempt income, so the related the expenditure which you have incurred for the exempt, to generate the exempt income, that will also be not allowed as per the corporate tax law. Okay. So the main purpose of certain income being the exempt from the corporate, to prevent the double taxation. So this income is certain income is exempt because of the to prevent the double taxation. Okay. So these are basically dividend, capital gains. If dividend is there, capital gains is there, real estate income is exempt, and there is a certain other things also, like dividend, capital gain, and forex gain, that is also exempt. And real estate related things are exempt. Okay. And what expenses are deductible? So these are the expenses which you can claim as a deduction. So wholly and exclusively for the business purposes, you can claim the deductions. For the capital assets also, you don't have to take the full capital assets is a deduction. Only the amortization or whatever the depreciation is, that will be eligible for the deduction. Okay, so expenditure which have a dual nature. Dual nature means certain part is for the personal purpose, certain part is for the business purposes. Then the expenditure which are pertaining to the business purposes will be allowed as a deduction, but which are for the this personal purposes will not be allowed as a deduction. Okay, so it should be wholly and exclusively for the purpose of business. And so, and certain expenditure are deductible under general accounting rules, may not be fully deductible. Yeah, this line is important. So maybe the certain expenditures actually which are allowed as a deduction as per the IFRS, but these are not allowed as a for the corporate tax adjustment. So IFRS profit you will calculate, then plus minus adjustment you have to do. These adjustments will be done in the there, and then final profit will come, that will be subject to corporate tax. Okay, that will be subject to corporate tax. So the types of expenditure is like bribes and penalties. These are not allowed as for the deduction purposes. Fines and penalties, these are not allowed. Okay, and other than amounts awarded as a compensation for damage breach of contract. So to these you have to study other than. Okay, so these are allowed for the breach of contract or for the compensation. So these expenditure will be allowed. Okay, so donation, grants, gifts, these are also allowed, but you have to give to the these donation and grants to the only qualifying public entity, qualifying public benefit entity, that will be listed by the ministry or cabinet decisions. Okay, that will be listed by the cabinet decisions. If you are giving donation or grants to these institutes, then you are allowed to claim the deduction, otherwise you will not be allowed to the claim. Dividend and other profit distributions, these are not, you can't claim the deduction for this one. Okay, corporate tax under the, if you have take corporate tax paid under the corporate tax law, then these are not the eligible expenditures, or expenditure not incurred wholly for the business purpose, that will be not allowed for the you to claim the, and which are used for the exempt income, that will also known the client expenditure also, like 50% will be allowed as a for the corporate tax. And why the 50%? If you are going through the VAT also, no? So in VAT, what is there is a input VAT. So whatever the expenditure you have made, so certain expenditure like 5% is a VAT also. So in VAT, what is there is a, you can't take the input of this 5% if it that is the for the this entertainment purposes. And so these are the 5%, you can't take the input VAT on the entertainment expenditure. But in the corporate tax they have allowed 50%. 50% expenditure will be allowed, 50% you are not allowed to take in the corporate, as per the corporate tax law. Interest expenditure also, there is a like EBITDA 30%, up to 30% of interest expenditure will be allowed as a deduction, and more than 30% then it will be not allowed, it will be carry forward for the indefinite period. Okay, so indefinite period for that. And also there is a certain exception rules up to interest expenditure up to 12 million. Okay, up to 12 million, then you don't have to go to a 30% rule. Okay, so this is the general rule, this is the general rule, but there is a specific rule up to 12%, 12 million you can give the interest expenditure, no need to go for this 30% calculations. But if the interest expenditure is more than 12 million, then you have to go in these rules, by this rule you have to go. Okay, these are the things. So let me now complete it. And now next portion I will start a tax rate. Okay, so in next video you can see tax rate.